Good morning, everyone, and welcome to our Wealth and Wisdom Breakfast Club. We are thrilled to welcome you this morning in the middle of the night, as our friend Chris Day always says. I am Catherine, Director of Client Relations with Anderson in Canada, and I will be getting us started with our fireside chat today. Leading the conversation is our fearless leader, Managing Partner Chris Rabidou, with more than 20 years of experience advising the United States, Canadian, and cross-border tax matters. Krista brings sharp insight and steady leadership to every discussion. She is joined by our friends and two exceptional leaders in Calgary, Shelley Kuipers, co-founder and chief executive officer of the 51, is an entrepreneur and investor with more than 20 years of experience building and funding innovation-driven businesses. And our friend Alice Reimer, CEO of Philip Fleet, is a technology entrepreneur who has built high-impact companies and driven digital transformation for global brands. This is a fireside chat, so expect a real engaging conversation focused on insight and experience. Enjoy.
Thanks, Catherine. Really loud. I'm going to hold it over here because it's like bouncing back at me. Good morning, ladies. Thank you for joining me. This is our first time having a full lady panel, so welcome and thank you for being the first to say yes as women. We're going to start off first and just have both of you give a little bit about yourself, the 51, your venture with the tech, and then we'll deep dive into some of our questions. So I do believe you are going to go first.
That's right. Older ladies first. Shelley Kuipers, born and raised in Alberta. I've had the opportunity to live in the US, UK, and Germany, which has been cool. So kind of gone away and come back. And I've been at tech for a long time, 89, when everything was kind of going from the mainframe to the desktop. So I was part of that transition and then subsequent ones after that. And made my first early stage investment in 98 in an energy company. So I bet on an energy entrepreneur then. And then in 99, after growing up inside of a company called Mirac with the founders there, they taught me well. And then I became an entrepreneur myself. So I've been like investing since 98 with purpose, like calculated purpose, and then an entrepreneur since 99. And then Alice and I commiserated about the ecosystem and the opportunity to really service women as investors and entrepreneurs.
That was back when we drank Diet Coke and ate licorice.
Yes, exactly. We don't do that anymore. Now it's just martinis. So we schemed on that in 2018. Alice introduced me to Judy Fairburn, and then 2019 we launched the 51. And so the 51 is a financial platform and a venture fund. We explicitly target women's capital to invest in women-led companies. Doesn't have to be women solely led, so we just need to see that women have a stake in the business that is material. And we've invested in, I think, 35 companies now. We've raised two kind of more general funds. We've partnered with Allison Sundstrom on a food and ag tech fund, and now we're out raising our third fund. And happy to report we have an anchor on that third fund. And so it doesn't end. You're always fundraising and you're always investing. So yeah, so that's, oh, and I should also say we have a community across Canada. So we got started in Calgary, but we're 47,000 strong across Canada, which is really cool because everyone in Toronto goes, wait, you're from Calgary? And so we're trying to put Calgary on the map once again.
Awesome. Thanks, Shelley. Alice?
Good morning, everyone. Alice Reimer. I am an accidental now serial technology entrepreneur. I started our very first SaaS company here in early 2000s, and we built one of the very first SaaS construction management platforms. I joke a little bit about we were SaaS before SaaS was sassy. And we happened to land luck timing our ability to execute. We thought we were going to be .com billionaires. Remember that .com? Some of you. It turns out we landed our first enterprise customer, and that enterprise customer happened to be Walmart. And so 13-year, very Canadian overnight success. Hello, Marco. Marco even worked with us for a period of time at Avoco. We took on Walmart's global design and construction management program. So we sold that company to private equity. And by the time we sold that business, we were serving 5 of the top 10 global retailers in their design and construction management processes. I then spent a little bit of time in our innovation ecosystem, went and worked with Shelley at her company called Chaotix. And I stopped going to Bentonville, Arkansas, and I started going to Bill in Denmark with Shell. And Shelley had built an incredible platform with the likes of Lego. And together we moved that business from being a services business to a true product company with more than 2.4 million fans of Lego, helping Lego bring new sets to market. So the Back to the Future DeLorean, the E.T., the Ghostbuster car, that actually came from their community of fans. And Shelley had started to build this incredible brand. So I worked with Shell at that opportunity. Shell was living in the UK, and I eventually took it on as CEO and helped get the company recapitalized and really become a real going concern together. And then I had a great opportunity. The dean of the business school tapped me on the shoulder and said, hey, we'd love for you to come and run CDL. We want to bring Creative Destruction Lab Rockies to the University of Calgary. And I said, Jim, hard to manage, don't want a job, probably not your right person. He said, you're going to be great. Anyways, it was transformative. For those of you who are aware, CDL Rockies is one of the leading programs now in the country and globally for the commercialization of deep science and technology related companies. The Calgary CDL Rockies, we have 3 streams, ag, energy, and a general technology stream. Thousands of jobs, billions of dollars of investment and equity value has been created as a result of that program here at the University of Calgary within our own ecosystem. And in fact, it's been transformative in bringing together different groups of people, technology folks, energy folks, ag folks, now all commingle in their efforts to help us accelerate the commercial potential of deep science and technology-based companies. Helped Shell, we launched the 51, but I'm actually a builder. So my actual day job is I am the CEO of Philip Fleet, and I run a payments fintech company. We are leading the digital transformation of a very exciting industry, which happens to be the fuel card industry. It is $1 trillion industry globally, and it has had very little innovation since the 80s. And it's very fun, and I love doing it every day. So that's me. Thank you.
Amazing. Thank you, ladies. It's, it's interesting when you think back to that spark of entrepreneur brain. You're always trying something different before everybody else does to see if it works, right? And I think you're both testament to that. So if you think about early in your career, how did you first think about wealth? So this is wealth and wisdom, right? And so sometimes wealth is thought of as income, sometimes it's ownership. And when did you find that changed for you, the definition of what wealth entails? And we're going to start with who, Alice? Shelley.
Shelley, we reviewed these last night.
Okay.
Shell's starting on this.
I'm telling you.
I'm a little behind Shell.
No.
She's older.
Oh, man. Okay.
Actually, I don't recall the moment. But I was working at Mirac, and who here knows Don Gray from Pado? Yeah, so I was working at Mirac. We had partnered with the Peloton guys, which was Glenn and Stu. So they were running Peloton. We partnered with them. They're the Grays too. And Don Gray started working with us at Mirac. And he was just like a rebel rouser, like rule breaker, didn't like to listen to authority, was just kind of a rebel rouser inside of the company. And it was very interesting to watch. So finally, I think it was in like 97, he's like, that's it, I'm gonna go start my own energy company. And I think kind of like working and observing him, I was like, okay, this is interesting. He seemed like a guy that wanted to take enormous risk, but he was super smart. And so I was still very young then, and I had a tiny bit of equity in my house, and I mortgaged my equity, and I put it into Pado. And it was like my parents, what are you doing? And I didn't really think about it. Like, I don't know what that was where I didn't really think about how risky that was. And so the first well was dry. I think the second one was dry, and then we finally struck it on the third one. And like that really changed everything because Peyto went from like nothing to something. And so that little bit of home equity that I had that I put on the table into this energy company, and I came from energy, right? So I worked in upstream energy, and then I worked at PSI, and I worked at Mirac. So I knew the energy industry. But it just paid off really well. And then, you know, like Alice reminded me last night, just took that money and reinvested it again, and reinvested it again, and reinvested it again. And so that's largely how our family has built its wealth, is by taking bets on entrepreneurs in private equity. So there's no liquidity at all. You're holding it for a long time, and you're hoping that, you know, they're going to work out. So yeah, that's kind of like how I got started on kind of wealth journey.
And I was one of those entrepreneurs that Shelley and Brian bet on, in fact. And so to answer your question, I don't know that I really quite appreciated the opportunity of wealth creation, quite frankly, until I started to spend time with Brian and Shelley. You know, I was very young when we started our first company, and I didn't really quite appreciate what it meant to have ownership and the potential that we could create. And so, you know, when I start to think about it now, it really was that sort of intersection. Brian and Shelley took a bet on us as an entrepreneur, myself and our founding team as entrepreneurs, and it worked out pretty well.
Yeah, it did. It was John Eddy that introduced us.
Yes, it was.
And I remember meeting Alice for the first time, and I'm like, Bri, I think we should invest in Avoco. And you're really going to like Alice. So of course, Bri swoops in, invests in Avoco, and jumps on the board. Meanwhile, I was in the trenches helping with Alice, kind of like build her company, but
marketing, product management, doing the real work.
Exactly. But Alice, you know, definitely exemplifies like the entrepreneur that we look out for and that we invest in.
And so you talked about the reinvesting and continual reinvesting. And for you, Alice, did you take on some of that trait because that's your first investment came from that? Or
I mean, that really was truly, we were talking about this last night as well. That was, you know, obviously the first investment, and it was, we mortgaged the house, we used the credit cards, like, you know, we did all of those things, but it was our own. And, you know, when you're 27 years old, who, like, what do you really got to lose, right? Like, you can do that stuff. But I think it did create an understanding and an awareness of how important that early stage investment is and the types of risk. I was sharing with Shell last night. My very first angel investment, I think, was probably in about 2011. It still has not paid back yet, friends. I'm still waiting.
Holding hope.
It's still a going concern, but I have not seen a return on that particular investment.
Well, that goes back to your liquidity, right? You can have money tied up, and who knows if it'll turn out or not turn out, right? So when you think about your first venture, your very first one or investment, you talked about your investment and it realized for you where you were able to, after a few wells, get it going. When was the moment that you're like, oof, I think I'm making it and I'm going to get some real wealth going here?
Never thought that.
Awesome. I like that.
No, like, yeah.
Still building.
Still building.
Always
sure.
building.
Building, investing. Yeah, no, there hasn't been any kind of like resting because of wealth. Yeah, like I work all the time, but that's my longevity secret. Work long, live long. But yeah, so there hasn't been that. I mean, yes, there's been wealth creation, but again, the propensity of our family has been, okay, let's put it all back in. So it's kind of like I don't play poker, but I imagine, you know, you kind of get your chips and then you put it right back on. And you keep a little bit, like, because you have to like pay for things. But, you know, we still do that today. So then sometimes like you're cash poor.
But yeah.
Yeah.
Same. And it's also, it's an imperative. Like, you cannot get early stage companies going without risk capital and early stage angel investment. And it can and will create wealth. It is just a different risk profile than, private equity, for example.
Mhm. Well, if you think about it, and did both of you grew up in families where entrepreneurship was a part of your being? No. So you were one of the first.
Absolutely not.
Okay, awesome. And
Yeah,
you?
my dad was very entrepreneurial, massive risk taker. There were, thank goodness my mom was a nurse and worked, and there was always some way to pay the mortgage. But so there was definitely some role modeling for sure.
That's awesome. Yeah, it makes a difference, right? Like I know for me, I grew up with one half of my family was extremely entrepreneurial and the other half was government workers. And so I had this beautiful balance of stability, but yet take some risks. So I learned how to create that stability in my brain somehow, because I would be like, you just risk if I had my way. So if you look back, with your early money and making equity decisions, how did that shape your risk taking today? Have you evolved in your risk taking? Have you looked to less risk, more risk?
We talked about this last night, and Shell, I think it's important that we talk about the way, and both of us really believe this, it's about not being an insider, but sort of having an insider view, right? And even as we think about it from our 51 investment perspective, where we have better outcomes.
Absolutely. So like our family has a family office and our sons are part of that now. I'm not involved in that because I don't have any time because I'm just doing the 51 now. But I would say if you look over all the investments, there's like probably three things come to mind. Number one is the entrepreneur. Like you have to, there's, with Brian, I do it. I'll be like, Brian, let's have the entrepreneur over for dinner. Let's have their family over for dinner. And if we don't want to do that, then I'm like, I really don't want to invest in this entrepreneur. We still might do it, but like I would say that's kind of a.
We had lots of dinners, by the way.
Yes, we did. We did. So many.
And I learned that rule. That was my first sort of like touch rule. It's like, okay, do I want to have dinner with you?
Yeah, exactly. And so then even it's kind of like building on that, like Alice said, is like being an insider in that company. So I would say that that's probably one of the most important things is that you always know what's going on in that company. There's been companies that the 51 has invested in, and we find about things like after the fact when it's too late, and we're like, well, we didn't know that. So major investor rights or being an insider of that company is hugely important because you want to be able to direct influence with your capital, and not just your financial capital, but your human capital, your intellectual capital, your network capital, like all of it.
And I think it's important to note, like from a 51 perspective, we don't rely on just ourselves. We rely on our community to help us learn that, right?
Exactly. So we're well over 300 LPs and growing. 91% of our individual LPs are women, which is like amazing for a venture fund. In fact, the venture fund ecosystem and industry told us not to raise money from women because you're not going to get a check from them. And we decided to do it anyway. But we're at 91% women on an individual basis. Growing are the check writers coming from family offices and family foundations. But each of these women bring a wealth of value, expertise, experience, knowledge, wisdom that we can then activate inside of our portfolio companies.
And network, right?
Network, yeah. Customers.
So we're just like talking amongst
No,
ourselves.
and I'm just observing, so it's okay. I feel I should just sit out there and ask a question once in a while. It's all good. But it's interesting you talked about the 91%. I'm going off script a little bit here because I mean, in our initial conversation, we had a discussion about women and how we sometimes have this self-limiting desire inside of us where we don't ask for stuff. And we come at it from a very different table, and there needs to be much more, I guess, safety, if you will, and inherently because of our emotional being, right? So
I mean, I think Shell can talk more to this specifically as it relates to what we experience on the 51, but women are just more risk aware. We're not more risk adverse. We just want to have perhaps a little more information and opportunity. And I'd say women actually want the opportunity to participate. We sometimes don't even get asked. And that's part of the narrative we have to change, right? My dollar is as good as Shell's dollar, is as good as, Bob's dollar, right? It's still the same dollar. But I think there's the appreciation and the opportunity as well.
Yeah. What's been interesting, so when we launched the 51 in 2019, we kind of put this out there, and Alice and I and Judy kind of assumed that there was a bunch of check writers like us, and we were like, oh, there isn't. Okay, so we want to do capacity building side by side with the investment and side by side with the community. And still, even today, we kind of joke about it at the 51. Our largest, fastest checks will be from a man, and our slowest, most diligent, most thoughtful check will be from a woman, in the way that they really evaluate whether or not they can write the check, separate from the capital that's going in.
And they want to contribute, right?
They
don't want to just write the check.
Yeah.
They want to help. They truly, when they're writing a check, they're like, how can I get involved? How can I help? Is there a pro that I could be useful
It's
for?
sometimes like a job interview, though. And I wish we would have recorded every single Zoom call that we've had with prospective investors across the country, because they kind of go, can I do this? And then can my money do this? And then how can I help? Where our male friends and our champions out there, they're like, how much do you need? And we're like, oh, okay. I didn't expect that to be the first question.
By the way, we'll take it all.
Yeah.
We'll take it all. We love having male champion allies and friends, especially when they're like, how much do you need? And let me just write you a check.
Can you share a moment when you had to choose between control and capital? So you realized that there was a decision that needed to be made for long-term equity, and you had to make a decision, or many decisions, throughout your different ventures. And what was that kind of moment where you're like, okay, I need to take control here a bit?
In my first company, we raised, a very little bit of friends and family, early stage capital. And then we grew literally organically off of that 25 to 30% year over year. Lots of great cash flow. It was awesome. And it was a very different sort of growth. Today, I'm a venture-backed business. And so that is an experience. I can share with you, we closed our Series A, a $6 million raise. We brought in a very strategic investor to our business. But myself and our board, we made a very purposeful decision about the capital we were bringing in and who those capital partners were. And I believe this last round will be transformative for us, because it was an important partner, important capital, but also a customer that came along with it. And so you make trade-offs, right? When you take venture capital versus, friends and family, you definitely make trade-offs. There's an expectation of growth when you take venture capital, a very aggressive expectation, versus when you raise other capital. So,
do you have anything to add, or?
One thought that comes to mind is many entrepreneurs out there, they're building their company and it's their company. And then they bring capital into their company and then it's still their company. And they don't evolve kind of their governance structure to accommodate this outside capital. So they keep acting like it's their company. And that drives from a position of wanting to have control. And we see that all the time. And some founders will really fight on different things because they want to remain in control, which we sometimes admire and then not. But I think the opportunity is what does that capital bring you that enables you to be bigger and better and bolder than you are today? So it's not a zero-sum game. It's not like I get diluted, therefore I'm not in control, versus going, this capital is strategic to me. I can grow better because of that capital. And then how do I surround myself with the governance structure to manage my business accordingly? We will see entrepreneurs really buck against the governance structure, and we just kind of go, governance can be a superpower. So embrace it.
And just understanding that, the wealth creation opportunity is for the entrepreneur, but it is also the return expectation of the investor, right? Like that's, and so to Shell's point, sometimes there's some coaching that has to happen with the early stage entrepreneur about recognition that as soon as you take outside money, the backpack changes. It gets a whole lot heavier, right? In terms of what you're trying to do as an entrepreneur because you've taken that outside capital. And you have to act and behave and put governance structures in place to reflect that.
That's right. And you always have to realize, I know, Anderson, we just did our initial IPO down in the US, of which you give up a certain amount of your company, but now there's a whole bunch of layers now that come for reporting, and being one of the first accounting firms to actually do an IPO this way it's kind of, there's a lot of lights on you going, are you doing this right? Are you breaking rules? What are you doing? And everybody knows Arthur Anderson back in the day loved to challenge the norms, and it's still continuing today to challenge the norms and try things. So I think that that's the entrepreneurial side, but you have to balance that control with capital injection to be able to do stuff, right? So I think it's definitely a big balance that comes there. And so when did you, from thinking about it, the investor lens, so we're talking about the 51, what do women founders commonly underestimate about protecting their equity while scaling when you're looking to work and invest in stuff? So I know we're risk adverse, generally, not risk aware.
Risk aware. I think that's what we like to use.
That's going to be my new title.
That's what we like to
aware.
use. Risk aware.
I like that.
Yeah.
I like that.
And Alice is going to remind me of what I was supposed to say for this question, because I'm menopausal. And we do invest in menopause solutions. We've made one. We're looking for more.
And women's health. We invest in women's health.
My menopausal brain the other day,
Yeah.
we bought tickets to a concert that I forgot I already bought. So now I have 4 tickets.
Exactly. What was I going to say to this one?
Remember. I can't remember.
Okay.
Let's move on to a different question. We can remember this one.
And
well, okay, this is what I would say. Like, I want to be clear. Like, I've invested in every type of entrepreneur. The reason why we set up the 51 was because I don't know if people are aware, but it's like in Canada, it's between 2 and 4% of venture capital go into women-led companies. So when we saw that, we weren't like, oh, woe is us. We were like, okay, well, let's go where the capital's not going. And let's go to those that aren't accessing this asset class. So we looked at the whole system and we said, okay, so 2 to 4% go to women-led companies. Okay, how's that going to change? Then we looked at the makeup of our team and we said, how can we introduce a different bias into our team? So we have all women investment team, which is great. And then we went back further into the system and said, the capital allocators, like, let's get women to write checks. So we tried to change the whole system. So that's why we pursued women. It wasn't because of women. It was because there was an extraordinary financial and economic opportunity. And I think everyone in the room is aware of like the wealth transfer that's underway. The majority of private wealth in Canada will be in the hands of women by 2030. And there were no women writing checks into this asset class. So that's what we were really pursuing. So when I look at this question, I don't necessarily think women founders, I think more just founders in general. And I would say who you surround yourself from a capital partner perspective is super important. And Alice has gone through a very interesting journey. Maybe she will share more of that in this talk, but Alice went out to the venture community and ultimately decided she wanted strategic capital lead versus more venture capital. But I think, again, it goes back to what we were saying earlier. Like, I think if there's a protection of my equity, then the boldness and the opportunity, the boldness of the opportunity can't be fully realized. So finding the right capital to come into your business, all aspects of that capital, and then maybe letting go of some of that equity actually results in a greater opportunity. Women, this is another statistic that's crazy. And Christina Williams at AEC does a report every year. And I want to say 3 years ago, it was something like 32% of all tech companies in Alberta are led by women. By the time we get to a scale phase, which would typically be Series A, we're like 12%. Like we fall off a cliff. And why is that? Is it because of inherent bias of our own thinking that's holding us back? Is it a lack of bringing the right capital to the table or the team that you're building? But something is holding us back from building large scalable companies like our male peers.
And I think some of it has to do with pattern recognition, right? So when you think about pattern recognition and investment, you tend to invest in patterns you recognize. And so it's so important that we have women-led capital, women-led companies, and that we have the male allies and champions to actually accelerate that growth. Because, 32 to 12, that's huge. I'm one of those 12, right? That is not very many women entrepreneurs, but I will tell you the number of women VCs that I talk to. Now, I will share with you my lead VC in our seed round was Janet Bannister out of Toronto with Staircase Ventures, solo GP, woman-led. We were her first investment. She invests very differently, and the conversation I had with her going through due diligence was very different than some of the additional VCs that are male-led. And so it's just the awareness and the role modeling and the pattern matching, which are really important when you start to think about investments.
And if you were to give that piece of advice to women about building the durable wealth and, there's things that are cross cycles, exits, generations, et cetera, that growth metrics actually just can't capture. There's just like that soft thing that you can't necessarily measure. What would be that one thing about building durable wealth that these measurements wouldn't necessarily capture?
Okay, that one was definitely you last night. Do you remember that question? It was 8:00. Okay, we were going to bed at 9, so like it's. I think we were talking about the durable wealth shell. Do you remember building a company and part of role model? Oh, we were talking about the philosophy and imparting that to our children.
Yeah. Okay.
How many martinis last night will you do?
No, it's none.
It's none, actually. That's what's so sad about this. So it's interesting in the way that my partner and I, Brian Craig, high propensity for risk, but calculated risk, very hands-on as an investor. But, our kids kind of grew up with like, oh, we have money, oh, we don't. Things are tight. Okay, things aren't. Okay, we're reinvesting it. And our kids would be like, you're doing this again? And like, do you have to work on every vacation? I think when I look at my kids today, my oldest son was at Solium when we did the transaction to Morgan Stanley in 2019. He's still there. It's you're in a very big company. He's got 3 young kids now, so I'm a grandmother, but he has lots of infrastructure around him. Where our youngest son is like, I want to go work at a startup. And he called up Marcos Lopez at Credit Up and said, can I come work at your startup? And was going, I don't really have any money, but here's the money I have. I'd like to invest it in the company as well as work there. So I think there is this philosophy that naturally rolls down into your kids. And I think the opportunity is, do they take that same philosophy with them into the next generation, or are they, repelled by it or scared of it? And so we're kind of seeing a little bit of both with our kids, but ultimately they are involved in the family business and they want the family business to be successful. And I think they're going to be bringing very different ideas to the family business about what's next.
So if I were to think about that, about what are some of those skills that metrics can't have, it's what I heard from you, it's the relationships, it's the willingness, it's the think outside the box, and one startup, you can't expect every box to fit around a person and say this is going to work.
And it's the role modeling, right?
Role
Like, I
models
think,
are
you know, Shelley and I were talking about our children. My eldest son is a fourth-year electrician. My youngest son is in university and works for us in the summers as an intern as a hustler. Like, that kid is making 50 phone calls a day. And so, you know, they appreciate what it takes to actually do it now, right? Not just the working on the holidays. What do you mean you have to work for a couple hours? Go to the pool, you'll be fine. You know, it's the appreciation. You know, our son who's an electrician, he's already thinking about when he's a business owner, right? Because he wants to create the, you know, he comes from the same philosophy school which we do, which is you build wealth through ownership, right? And so he, in the world that he lives in, is already thinking about how he's going to be a small business owner. And of course, I'm going to tell him how he's going to do it differently, and we're going to create an amazing firm. But yeah,
back to control.
it's role modeling. It's role modeling, and my way.
It's funny though, 'cause
Technology driven.
do what you're told. My kids used to always say to me the same thing. Why do you work so much? But now my youngest, who's 23, graduated university, rewrote the sex ed program for BC School Education Board. And she phoned me the other day. She's like, Mom, why did you give me the workaholic role? Like, I didn't actually want this, but now I'm like a workaholic just like you. And I'm like, well, no, it's I love what I do. I'm not a workaholic. I love what I do.
Well, Shell said it's our new longevity plan. We love it.
That's right. Keep our brains young, except for when we're menopausing and can't remember what we did yesterday. Yeah. So for women, intentionally building equity over the decade, what's one mindset shift or capital strategy you believe is essential but is still being underutilized in the marketplace? What's one tidbit you're going to give someone?
Is this our last question?
No, you have one more.
Because I have a really great line.
Would you
for
like
the
to
last
do the-
question? Mindset shift or capital strategy. You know, I think I would just say, particularly for women, I would say get involved, find out, and you know, don't discount this asset class in early stage investing. Don't put all of your wealth there, but just don't discount that asset class, right? Like, you know, think about it as part of the overall capital allocation sort of portfolio strategy. But it can be very rewarding, even if it doesn't necessarily create the kind or outsized return. What it can do is create a tremendous opportunity for learning, engagement, and potentially wealth creation. It is risky though. The early stage, capital stage, like it's just, yeah.
And I would say really try to retain and grow that growth mindset. Be super optimistic. Be bold. And it's hard to be like that in Canada right now. Like, I send stuff to Alice and I'm like, see, like, look at the numbers. But then it kind of goes back to, okay, well, what am I in control of? What can I control? And then how do I just retain like this bold thinking, growth mindset around the opportunity that I'm trying to create with my colleagues and my community and my friends. Like, I just think like it's up to us. It's up to us as entrepreneurs to build this country. And so, by hell, like, let's build the country.
I
Let's
love
do
that.
it.
I love that.
And I was just going to give us a little, yes, for sure. And I was just going to give us a little plug for the 51. Do you want to talk about Movement 51 and what we do at Movement 51?
So, like I was saying earlier, when we launched the 51, it was capital and community. We were like, you could be an investor today or in 10 years, it doesn't matter, you're part of the 51. Like, we want you on this journey with us. And then the capital part was activating capital and deploying capital. Then we saw that there is a capacity gap. So in some cases, we would talk to women and they're like, I haven't written a check before. I don't know what a venture fund is. And we'd be like, okay, let's walk through what this is. We actually set up a program around early stage investing, but we set that up in a not-for-profit. So we took that part out of our business model, created a not-for-profit. And today we have programming for early stage investors to look at, well, what is the difference between angel investing and becoming an investor in a fund? We do a fund, it's very different. You have a portfolio approach versus as an angel, you're making a bet on a single entrepreneur like Alice. And then on the entrepreneur side, we do the same thing. So we saw, again, a capacity gap of women being investment ready, knowing their numbers, learning how to captivate the financial markets to get the capital in their business. So we developed a founder program too.
One thing that I'll say, and you talked about it earlier about when women are coming in investing, they want to help. And I think the one thing I would say is we also need to learn to ask a bit more for help, because I think it's not one of our strong suits to ask for help as women typically. We always want to give the help. So I think that's one thing I would add. So now it's the last question. So we're ready for it. If you could leave one truth about wealth creation that only becomes clear after building or investing in a business, what would it be for you ladies?
Okay, you ready? Here it is. I wrote this one down.
Are you going to drop the mic?
Here, it's probably not that good. You can't just participate in the economy. You need to own a piece of it, and deeply believe that it will belong to those who own it.
Love that. And how about for you?
I have nothing to say after that. That was very good.
Oh, so it was a mic drop.
But yeah, I would just emphasize again, it's up to us. It's up to us as investors to take a risk on what we want to see in the world and make it real. And then it's up to us as entrepreneurs to do just the same. What do we want to see in the world? Go out and build it.
Awesome. I love that. And so we're going to open it up to all of you, and we're going to walk around with a microphone so that the camera can pick it up. So please wait.
I'll get to ladies first.
Thank you so much for imparting all your wisdom on us this morning. And yeah, my name's Andrea, and I just have kind of a question that I know you touched on several times throughout the talk, but I guess as a woman in her 30s with a stable job and long-term retirement savings and investing, just kind of living a, I guess, normal life, not knowing what the first step would be, what would you say would be the most important first step for someone in my situation?
As an entrepreneur or an investor?
Both.
Well, as an investor, I'd say go to Movement 51 and look at the programming. And I'm being really genuine. I don't know how many cohorts we put through now, but just that learning and that experience in terms of.
And the community of women and men is fantastic. So there's the programming itself, but then it's being part of that network and just continuing to learn. Aren't you going to answer the other part of the question?
Oh, entrepreneur. Big suck in there. I think as an entrepreneur, I think it is that is the most, having a stable job and RSP savings and all of that stuff, leaving to become an entrepreneur is, it needs to be very thoughtfully done. I am an accidental entrepreneur. I did not set my sights on being an entrepreneur. I actually thought I could work in a big business. And so my suggestion would be, I think there is no truer form of potential wealth creation than being an entrepreneur. I would just say, I would say explore it, learn about it, spend time at places like Platform Calgary, and really see if that's something that you have the stomach for.
I would add that, I didn't know what an entrepreneur was until I worked with entrepreneurs.
That's really good advice,
and
actually.
And then I was like,
that's great advice.
I could do this. I mean, it took 10 years of schooling from them to figure that out.
Yeah.
But I advise anybody who wants to become an entrepreneur, go work for some entrepreneurs. Go jump into their company and just look at how they operate and build every day. And that's a muscle that you can observe, and eventually you start to take it on. Like the guys at Mirac, I would be like, oh, there's something wrong over here. And they'd be like, and I'd be like, okay, like, go fix it.
Go fix it.
Go do it.
Go do it.
And like, I was like, okay. And then pretty soon I just didn't even ask. I would just do it. And that was the culture that they built. And so not every company is going to be like that. Again, we can kind of go back to entrepreneur control and stuff. I even have some of that. But I think like go work for some of the best entrepreneurs in the city and the province. And
yeah, that's great advice, actually. I'm going to steal that.
Oh, thank you.
Hey, thanks a lot for the presentation this morning. Just a quick question. You obviously see a lot of different industries. Where do you think women entrepreneurs might be underrepresented? Like which industries would you like to see them more active in?
Technology
Yeah, technology. And I would say like,
and deep tech in particular.
yeah, deep tech is
Deep tech for sure, for sure.
Yeah, absolutely. Ag. I think like our fund 3, we've kind of picked 3 areas that we're going to invest in, again, because of your question. One is health and well-being, like health and well-being. The second one is wealth and financial. So we want to see solutions inside of the financial system get developed by women, for women. And then the third is, what is the future of work? But like on the health side, it could be deep. I mean, we looked at one entrepreneur and one of our LPs invested in her directly. She is based in Vancouver and she does 3D printing of cancer tumors to learn how to treat that cancer outside of the body so that when it goes into the body, it works. Like those kind of entrepreneurs are just mind blowing. You're like, wow. And she created it from nothing with her colleagues and her capital and everything. But
thank you all for a fantastic presentation and all that you do for entrepreneurs. You mentioned as part of your investment thesis, the entrepreneur is one of the things you evaluate. So when you're looking at an entrepreneur, what are the non-negotiables and what are the ideal to haves?
I mean, I think one of the non-negotiables is for sure. I would say it in Shell's test, the do I want to have dinner with you? There's a whole bunch of stuff. And at my home, right? There's a whole bunch of stuff that's wrapped into that. First of that is, do you have a big vision, right? Like, from a venture perspective, we're looking for businesses that can be 100, 200, $500 million type of businesses, right? Not a awesome small business that'll generate 30 million a year of cash flow, kind of, or $30 million of revenue. And so I think that's part of it. I think coachability is part of it. I think the thing certainly for us that is a huge signal is the team that is around that entrepreneur. So has that entrepreneur been able to build a team, inspire a team? If you have an entrepreneur who keeps chewing through people, that for us is like the biggest red flag, I'd say. Hey, Shell?
Yeah.
And it tells us a lot. I mean, then you evaluate the technology, all the other stuff. But from an entrepreneur perspective, those are biggies, hey?
Yeah, absolutely. And Alice's wisdom many years ago to me was about like a founder CEO has to be able to do 3 things. So set the vision, build a team, and then finance the business. And that can be through customer revenue because you're so great at go-to-market, or that could be capital to scale. But if the lead entrepreneur doesn't have the ability to do those 3 things, and so at the 51, that means that we need to see some demonstration of like commercial aptitude, commercial DNA in the business. So we're not going to invest in an idea or a science project. We want to see that you can mobilize your key stakeholders around what you're selling.
Actually came from Marty Reed at Evoke Innovations. He gets the credit for that one. Yeah.
Hey, thanks. Great talk. Quickly, just wanted to ask you, they say, what's in a name? And you go, actually, a lot, right? You want to comment a little bit about branding and marketing with the entrepreneurial side, and fascinated the 51. Where did that come from?
The name?
Yes.
Yeah. So we spent about a year doing research on the 51. It wasn't called that before we got it going. And we stumbled upon, we were like, doing our research, and that was before ChatGPT. But
how the world has changed.
Exactly. But we stumbled upon a statistic that on average, women make up 51% of the population. And we were like, didn't know that. And it was very kind of like inspiring for us because we were coming from the early stage venture ecosystem. And, one of the most repeated stories in the venture ecosystem is, that sounds like an interesting business, but women are a niche market, and I'll check with my wife and see if this is like an important type of business. So we really wanted to shift the mindset in the industry around us being a minority or a niche market to we're the majority of the population and therefore a massive market.
Thank you very much. Nice to see both of you. My question is around the comment that was made about how entrepreneurship is nation building. And one of the things that we've heard in the ether is that we have to build our companies to get to sell them out of Canada. And I'm wondering if that is shifting now, if you're seeing that there's more of a entrenchment of, no, we're building in Canada and we're keeping our companies in Canada. We might have customers away, but we're staying solidly here. So I'm just curious, especially because the tech sector, we talk about the Silicon Valley and stuff. So just curious about that.
This is a tough one because, again, as tech entrepreneurs, we go out to market and we seek capital. We go out to market and we seek customers. And Canada just doesn't step up in either regard. It's really, really challenging. So what happens is these entrepreneurs are then forced to go to the market that has capital and customers. And then lo and behold, our later stage investors, like a pension fund, is investing in the US market, which are the Canadian companies that are down in the US that have built a company. So we have capital, but it's so de-risked by the time it's deployed into what we're building, like what the type of technology that we're building. And so I would just say that's the biggest challenge is the venture ecosystem. It's not big enough. It's slow. And then, if we think about ourselves as entrepreneurs over the years and decades now, you go to the Canadian market and you go, I'm selling my wares. This is a problem I'm solving. And it'll be like, okay, well, we'll think about that. Like we don't consume our own stuff. And so I think that's the challenge. That being said, like, the 51 from a perspective, we're glad we didn't go to the US as a market now. Like we are proudly Canadian. We want to recapitalize Canada through Canadian women capital and mobilize this economy that hasn't yet been fully realized. But I think that's the challenge.
And just to add to that, I think, we're a Canadian business. We started in Canada. I'm just going to the US. Like we'll launch in the US this month, actually, which is very exciting for us with our first US customer. We had to prove the market here. We had to prove the opportunity, and it was hard. But we just simply are not a big enough market. Like our growth vector in the US is just 10x obviously what the opportunity is here. And so we have to have US customers in order. We're a venture-backed business, right? There's an expectation of return that I intend to deliver for our investors. And so I don't have an alternative.
I know in my business, we see quite an increase over the past year of US capital coming into Canada and structuring for that, which is great for Canada because it means we're getting more access to capital to build, to then rebuild and reinvest and continue, right? So I know from our perspective, there's a lot more money coming here the past year and a half than I've seen in the past 25.
I saw that. It was a report that came out from TD, I want to say the speaker last week.
Canada is a good place to invest.
43% of the capital that's coming into Canada right now is from the US. The largest investor. So it's either a really good thing or not. Yeah, like I think that I would like to see more transparency around that capital. Like where's that capital going? Are we losing control of specific industries through that capital? We don't know. But I think that would be interesting. Where I think Canada, they had two charts. I think Canada is the 5th largest investor in the US or something like that. Yeah.
One more?
We have one more quick question.
Oh, we can do one more.
One more. Are you sure?
Yeah.
It's 53. We got 2 minutes.
Yeah.
Okay.
Thank you for making time for this question. I was wondering, you mentioned about developing a business mindset and a growth mindset. I was wondering how we could go about doing that, if you have any tips on how we could get started.
That's the question. It's Alice and I calling each other. No, I think it takes a tremendous amount of discipline for an entrepreneur to have that growth mindset on an ongoing basis. And I think, like, I really believe, like, you have to look after yourself in order for that to happen. So it's like, am I exercising? Am I sleeping? Am I surrounding myself with, the most talented people? Having the bat phone, like, to my bestie, Alice, when things aren't good. Like, you have to build it, and it is a ton of work. Like, you have to be a warrior every day when you go to work.
And more importantly, are you stretching yourself, right? Every day, are you stretching yourself in learning, in networking, in meeting new people in an area that you know nothing about? I had this incredible privilege of leading CDL for 6 years, and I learned stuff about industries and opportunities and met the most incredible people. And so it's about creating moments where you are every day stretching yourself. You're learning about a new technology. You're learning about a new industry. I knew nothing about payments. I knew nothing about the oil and gas business. Now I would argue I had a PhD in both. And so that's what it takes in order to truly develop that mindset. It's that willingness to do that.
Yeah, it's like the Goggin, right?
What?
The Goggin. Don't you know the Goggin?
No.
Okay.
No.
I listen to the podcast probably every quarter. It's the David Goggin podcast with Huberman.
Really?
Yeah. And his philosophy is you have to do something that makes you scared
And uncomfortable.
And uncomfortable. And that's how you develop your prefrontal cortex. And that's how you develop this mindset. Yeah. Like, you have to be scared.
Goggin. Okay.
Goggin. The
Words of
Goggin.
advice today.
David Goggin.
How do you even spell that?
David Goggin. Goggin.
Okay.
That should have been your one takeaway.
Alrighty, I'm here to thank the speakers. For those of you who don't know, my name is Shondell Sabat. I am a director at Anderson for Enterprise Advisory. First, I want to thank everybody for coming this morning, and those who came in the middle of the night, as Chris would say. I thank you very much for doing this today, Krista, for moderating. It was very, very insightful and answered a question for me that has been gnawing in the back of my mind for many, many years. Where did the name the 51 come from? So thank you very much. So today we have for you homemade butter tarts made by Catherine with love and a card. Thank you so much.
Thank you. Thank you, everyone.
Yeah, and so before we go, we'd like to encourage everyone to stick around. There's more breakfast in the back, more coffee. And as we heard today, networking is an important part of what you should be doing. So this is your opportunity to practice. Thanks again.